wills and probate, I mean, in my view and most other professionals' view, and it's not because it makes us money, everybody should have a will. And the reason we think that is because we've seen the messes that crop up when they don't. Or pretty well everybody. It's very rarely that you don't need one. There's all the usual reasons that you want to protect your nearest and dearest, but actually it's a surprising number of people do fall into the tax bracket who don't expect to. They haven't actually thought about policy of insurance which might fall into the pot, which can swell the numbers and so on. And if they don't go into the tax bracket, they may be going to inherit from somebody who does, and so it goes on. So again, if you're going to have a properly drawn will, you need somebody to look at the whole situation of what the probabilities are in your life and how you should cope with those. And then at the other end of the exercise, once you've made your will and you've died and it comes into effect, you need a grant of probate in order to administer the estate. Grant of probate is simply a certificate issued by the probate registry which gives the executors authority to handle the money. So in order to get that, they have to do a revenue return. It's a bit like it's like your annual tax return, but it's a one-off capital tax return that you have to file with the revenue, giving a financial snapshot of what the person who's died was worth, what they owned and what they owed on the day they died. And there are some quite complicated rules about that. You have to include in what they owned things like interest accrued on bank accounts. Even if it's not actually been paid in yet, you have to have that up to the date they died. So again, most people need a bit of a hand with that. People do try and do probate on their own, and some are successful. The things that worry me, I quite often get them back after somebody's tried to get probate themselves and then something has gone wrong, and it's usually that they didn't know what they could claim. So they've actually, a couple of weeks ago got 80,000 back for somebody who'd overpaid inheritance tax. They didn't actually need to pay any, but they weren't going to be told that by the revenue. So it's worth, even if you do want to do most of it yourself, it's worth getting somebody who knows what they're doing to cast an eye over it at least. But the job of the executors is to collect in the assets of the deceased person, pay off whatever bills they owed and the funeral expenses, pay any legacies that are mentioned in the will, and then having satisfied the revenue that you've done all of that properly, make sure you've cleared all the income tax to the date of death and during the administration, and then to distribute what's left, which is called the residue, between the beneficiaries that are named in the will. It's not as easy as it looks. People think, oh, it's easy, you just write and collect all the money and pay it. As I say, it's actually the things you might not know that you're entitled to, or that you need to satisfy a department on, that it's worth having a hand held with, I think. And I would say that because I own my crust, but I genuinely do think that's the case. It's not a job for beginners. That's why we do so much training. Yeah, there are various opportunities for tax planning. Firstly, in a lifetime, people might think, well, hang on a minute, I've got, if they're lucky, I'm going to inherit a chunk of money from Dad, and I'm now, 65, 70 myself. I'm not sure I'm actually going to need all of that. And if I were to die in the next 10 years, it's going to put me over the inheritance tax threshold. Dad will just have paid tax. I'm going to pay tax on the same money. That may not be the ideal outcome. So during your lifetime, you might want to there are various things you can do about that, including deeds of variation of a dad's will if you're in time, or setting up trusts during your lifetime. There's a whole raft of things you could do with that. But in making your own will, you should have an eye to all of those sorts of issues and how you can minimise legitimately what tax you might have to pay when you die. And after a death, again, very often there are ways of, deed of variation is the classic one, where perhaps you may not have used allowances that you could have used, and if the family agree or the beneficiaries agree, you can realign things just sufficiently to ease up on tax. And those who then inherit, of course, need to think about their change in circumstances. They probably need to make a new will because they've just inherited possibly a significant amount of money. And that might very well change the way that their affairs need to be managed. So that's another time at which you would look at the beneficiaries' tax planning to make sure that they're going to use the money in the best way for them and their family, of course.